So actually we're seeing sales decline accelerating, and also investment in the property sector is declining at a faster rate. So I think overall, despite having some hope for recovery for this year in the first half, I think the second half is looking more or less the same, or sometimes even worse than before.
But the market reaction is very different from, say, 2 years ago. Why do you think that is, that the market is just trying to ignore and just focus on the stock market? Because maybe they are trained with the property market mess.
Yeah, I think people are getting used to it. But most importantly, if you look at the Chinese economy these days, there's a dichotomy that is going on, right? So one part is totally unrelated to the property sector, which is the high-end manufacturing, AI, robotic movements and all that. And that part is doing exceedingly well, and it's actually taking market share from the rest of the world. I think anything related to the property sector, however, is doing really poorly. But this part, fortunately, is becoming a smaller contributor to the overall economic growth. So I think as a result, people are starting to overlook the weakness in the property sector.
And staying on the property market mess, do you think that maybe the market is more comfortable with it, maybe people are getting used to it, as you say, or some level of belief that the policymakers are not going to let it just really implode to the level that it actually affects other parts of the economy or the stock market that is running in a very robust manner?
That's right. Well, I think, the property sort of malus has been ongoing for almost 5 years now, right? So I think we peaked in 2021. And ever since that, if you look at the property price in the Tier 1 cities, it's down 30%. In many of the Tier 2 cities, it's down 40, 50%, sometimes even more. And despite that, there's still new projects being built, right? So for example, Vanke has close to 800 projects that is being built. And the two big guys, actually have over 1,000 projects being built, right? So the inventory overhang is very significant. It's very difficult to get rid of. I think late last year, the government actually had come out and say, wow, we're going to launch a 300 billion yuan bailout fund, to take out many of the unsold inventories. But you're talking about a sector that is still selling probably 7 trillion to 8 trillion yuan a year, right? So 300 billion is not going to do much. So I think as a result, things just keep dragging on. And I think recently, specifically for Vanke, is because its short-term cash position is dwindling, so it's not nearly enough to cover its short-term liability. And more importantly, I think Shenzhen Metro, which is now the largest holder for Vanke, is asking for collateral for its loan to Vanke. Right, so people are seeing it as a weakness that is developing for this developer.
So how do you see this getting resolved? I mean, the company asking for a delay in coupon payments and so on. The government is not really actively trying to work things out. You say in your note that the only way out is government bailout, but the Chinese government is not really, it's not really in its nature to do that.
Yeah, because the mentality really is that, you don't want to develop moral hazards for these people. So in the past couple of years, because of aggressive expansion, many of the developers, basically engage in some sort of illicit activities, for example, misappropriate people's deposits for new buildings, all right, so use it for other purposes, etc., etc. And now many are being investigated. Recently, for example, Vanke's senior management is being investigated by authority as well. So I think, for bailout, that is still not happening is really because of this moral hazard mentality that could be developed, once you have a bailout. And also, when you want to bail out this sector, just now I mentioned that, right? So we're still selling 8 trillion yuan a year, right? Which is a very humongous amount in an economy that is 120 trillion yuan in GDP. Right? So the bailout has to be like 10 trillion in size for it to be effective. Right? So it's a very large sum we're talking about.
So investors will just have to go through this very painful process and
yeah, I think it's a very drawn out, very drawn out process, right? Okay. So I think if you look at the Japanese experience, it's been like 20 years since they walk out of the shadow. I think for the way China is handling its property sector, seemingly it's going that way.
Do you think the public in China, the general public, the sentiment has changed, looking at how the property market sort of blew up here, that it was all about buying properties, and maybe that's changing and there is really no alternative? Remember Tina in markets, and they're just buying up stocks, and that can explain the rally in equities?
Well, I think, so even though there's a secular downtrend in the sector, right, so you still have technical rebound. And also this year, I think the PBOC has been pumping liquidity into the system. And property used to be, one of the most sensitive sector to interest rate change. And therefore, people are looking for a technical rebound in this sector, but, you're doing a technical rebound on the way down, right? So I think for many asset allocators, the Chinese property a technical rebound should be sort of a way to exit, right? So you sell on rebound, right, rather than buy on dips.
Okay. And does that somehow explain the rally to a degree in stock markets as well, that maybe people exit if they can in the property market? They don't put fresh capital into the property, and then they're looking at, well, I mean, they're not going to go for a bond market at this point, right?
A bond has been in the bull market for like 3-4 years.
Exactly.
Right? So it's actually the best performing asset class in China for the past couple of years until this year. So this year, people are reallocating their cash and capital to the other part of the economy. And also, for the property sector investments, you're right. If China continue to sink investments into the property sector, then I actually think that it's a bad news for the economy. In the sense that you're throwing good money after bad, right? So right now, we're actually investing in high-end manufacturing and many other more productive areas to prop up economic growth instead of investing in the property sector that is still ailing and in a secular downtrend.